And joining us now to discuss the crypto markets and more is Jeff Dorman, CIO of crypto asset manager Arca. Welcome to the show, Jeff. So you're a long-term bullish on Bitcoin. That being said, you say it's one of the worst performing digital assets, and we have a chart from your blog at Arca. Tell us what you mean by that.
Sure. Yeah, I mean, that's not an opinion. It's fact. Year to date, cryptocurrencies as a subsector is the worst performing subsector, and specifically Bitcoin is, I think, ranked number 12 out of 120 assets that have more than $250 million market cap in terms of year to date performance. So, there are real pockets of strength throughout digital assets, and in Bitcoin, at least year to date, it just has not been part of that.
Yeah, just looking at your chart year to date, at least Bitcoin has gone up it's still up 18%. Whereas if you invested in NFTs, wow, that's over 1,200%, or even centralized exchanges, 700%. Can you give us some more color into those numbers?
Yeah, I think the biggest part of this is, there is certainly a beta component to the market, right? Where in general, there are some correlation dependencies between Bitcoin and Ethereum and some other digital assets. But more importantly, these other sectors have completely different drivers of success and failure. And also the majority of them have real revenues and real cash flows and oftentimes real yields. So as this asset class grows and as the investor base becomes more sophisticated, it's not uncommon at all for investors to bypass Bitcoin and Ethereum altogether and look specifically at gaming assets or DeFi or CeFi and some of these companies that are not centralized or not decentralized necessarily. A lot of them have a real CEO. They have a real a management team. They have oftentimes equity in their capital structure in addition to digital assets. But the digital assets were structured in a way that accrue real economic value when these companies grow. So as you start to see revenues and cash flows grow, ultimately that means you have some sort of either explicit or future dividend yield that will come back to you as a token holder. And I think that's the biggest reason why you're seeing such a dispersion right now between Bitcoin and other digital assets.
And yet we are seeing some news about Bitcoin with El Salvador. Paraguay is introducing its latest Bitcoin bill. So why is Bitcoin not really moving on these, ostensibly what could be considered drivers of markets?
Sure. I mean, Bitcoin is now a $600 billion market cap. It takes more than one piece of news or one new investor to move something that big. I think there's only, if I looked at it the other day, I think there's only 10 public companies that have a market cap greater than Bitcoin. It's unreasonable to think that one piece of news or one data point is going to move an asset in any meaningful way. The reality is, from a Bitcoin investor standpoint, it's fairly binary, right? Either you think Bitcoin is going to be a real medium of exchange and a real store of value in line with gold, or you don't. And as a result, it's either going to be trending towards zero if it doesn't get there, or it's going to be trending towards probably $500,000 to $1 million per token if it does get there. And really, every data point along that binary curve is just increasing or decreasing that probability of success. So, with Paraguay and with El Salvador, you could argue that, sure, that maybe slightly increases the probability of success of Bitcoin getting to that higher level. But it's not, to me, in my opinion, it's not material enough to generate massive returns in an asset this large.
Right. So what are you advising your clients? Is now the time to buy Bitcoin or to diversify into other crypto assets?
Well, Bitcoin is a passive vehicle, in our opinion. There's no advantage to being actively managed. There's no advantage to trying to time markets. If you have a long-term view on Bitcoin, then there's no bad time to be a buyer of Bitcoin. I have no ability to tell you whether Bitcoin should be trading in a $30,000 to $35,000 range, or a $10,000 to $15,000 range, or an $80,000 to $85,000 range. It's fairly arbitrary, all of these price points on its path towards what I think is inevitable to be a $10 or $20 trillion asset. All you're really doing, if you're making a price prediction on Bitcoin, is you're either shortening that time frame of getting there, or you're increasing the probability of getting there. And not much has changed this year in that regard, in my opinion. The other digital assets are different, right? We have seen massive revenue growth in gaming companies like AXIE Infinity. AXIE Infinity is doing $50 million of revenue this month alone. We've seen incredible fee generation on Ethereum And ultimately, with the EIP 1559 proposal, ultimately token holders are going to start getting a piece of those fees, right? DeFi, same thing, massive revenue growth. Centralized exchanges from Binance to FTX and some of the smaller ones, same thing. You've seen massive volume growth leading to massive revenue growth. So when we speak to investors about timing, we can point to real metrics as to why it's a good time to enter these other parts of the market. They're trading at historically low price to sales ratios as the fundamentals continue to improve, but the price has been dropping. That to me is indicative of trying to time the market a little bit more. With Bitcoin, it's much harder. You're playing a guessing game with a long-term horizon.